Everybody to Safe Option Strategies. Welcome to our presentation, Protect and Grow Your Money at the Same Time, the safest way to trade today's stock market. By way of introduction, my name is Jeffrey Dunyan. I am the owner, the founder of Safe Option Strategies. I've been running Safe Option Strategies and teaching people how to trade very profitably and with very low risk in the stock market, because the reality is this: you want to be in the stock market, you want to make some money, you want to see your portfolio grow, or at the very bare minimum, you want to see your portfolio protected. But that's not always easy to do, and it's especially difficult at times to see both things happening, to be in a very protective mode within your portfolio, but to still get good growth out of it. So I'm gonna share some things here with you to teach you how to do both of those things. Before I get too far into this presentation, let me just put all my cards on the table. I know some of you have seen my presentations before. I do a new recording like this every couple of weeks, put it on our website, and then send out some advertisement pieces. It's been a little while since I've done a live presentation like this and actually had a group of people on with me live. And so I want to get all my cards on the table and tell you this right now. My goal is not to teach you everything that you need to know right now in this one presentation to be able to successfully trade these strategies. My goal is to introduce you to what we're doing here at Safe Option Strategies, to introduce you to our way and our method of trading, how we deliver the education, how we teach you to get really good at this stuff. And my hope is that you show some interest at the end of all of this in some of the education programs and education packages that we offer to people. Now, I'm telling you that up front because I don't want this to be one of those presentations where you get to the end of the presentation and say, oh, this guy's just trying to sell me something. Look, I'm being honest with you and upfront with you. My goal is that you'll show some interest in what we have to offer. We've got a very affordable investment education. It works really well. It's worked for thousands of people throughout the country and around the world. I've got members of my program in over 20 different countries outside of the United States, and they're able to trade the U.S. markets and do it very, very effectively. So I don't want that to be a surprise to you at the end of the presentation, that I'm going to tell you a little bit about the education packages and the programs that we offer, and I'm going to make you, those of you that are on with me live right now, I'm going to make you a pretty incredible offer if you're interested. I'm not going to give you a hard sales pitch. I don't believe in doing that. But I think the worst thing that people in my industry sometimes do is that they offer a presentation like this. They make people feel like, hey, this is going to teach me all the secrets of everything I need to know. And it's just what I'm telling you it is. It's an introduction into what we're doing. Now, with all of that said, I genuinely, sincerely hope that if we get to the end of this presentation and you have very little or no interest in looking at our education programs, that at least I've taught you something in this presentation that will be beneficial to you and that will help you. And that way you could leave this presentation at least saying, you know what, I wasn't interested in the education, I wasn't interested in buying any of their programs, but I appreciate that they taught me something that I didn't know before and that will be beneficial to me going forward. So those are my two goals, to let you leave here with something that will help you out, but to hopefully spark enough interest that you'll at least start a dialogue with us and have some conversation with us about whether or not any of our programs would be effective for you and be affordable for you to really get good at this and really learn this. Okay, enough of introduction. Let's dive right in. My goal is to have this presentation not go more than maybe 45 minutes at the most. So let's get rolling right into the meat of it. You see the question that's been on the screen for the last couple of minutes. What do you want from the stock market? I have asked this question to people probably thousands of times over the last 15 to 20 years as I've been teaching this to people. In some form or another, I ask them, what is it you're looking for? What are you trying to accomplish? What do you want from the stock market? I'm going to make an assumption that most of you that are on with me live right now probably have money in the stock market, and probably you have money that you are managing in the stock market. Maybe not. Maybe you're looking at this as a way to kind of learn how and figure out how to do that for the very first time. But my guess is that you're already managing some of your own money in the stock market. When I ask this question, what do you want from the markets? People tell me income, security, wealth, diversification. These are all answers that I get. A lot of people would love to take what they've made, what they've saved, what they have invested in the market, and they would like to turn a monthly income off of it. They would love to find a way to just get that money that they've put away to generate some income for them every month. It would be great if you could do that in the midst of also having a fair amount of security. One of the challenges with this is that people take too much risk. I get people ask me the question from time to time, and this is a tough one. When I get asked this question, it's a tough one. I want to make like just $2,000 extra a month from my portfolio. And I say, great, I would love to help you do that. How big is your portfolio? And they say, well, it's $20,000. Well, guess what? If you've got a portfolio that's $20,000 and you're trying to make $2,000 per month as an income on that, you realize you've got to net 10% every month? You have to make 10% every single month to be able to produce a $2,000 a month income off $20,000. Now, I've had months where I've made 10% on my portfolio. I've had months where I've made a lot more than that. I've also had months where I've broken even, or months where I've made 3 or 4%, or 1% or 2%. I've had an occasional month, even with the strategies that I'm going to teach you, I've had an occasional month where my portfolio has been down just a little bit. Now, I'm okay with that because I've never exposed my portfolio to big risk. And when I'm occasionally down just a little bit, I'm usually on a path where I know it's going to come back and where I know it's going to be okay. So, income is great, but you've got to have a realistic expectation about it. Income with security, if you're trying to achieve 10% every single month that you're in the market, you're going to take some big risk. You're going to gamble a lot. And it just takes 1 or 2 times for that to sting before you see that you don't have enough money to trade with anymore. Wealth, some people are not interested in pulling out income right now. They're not interested in adding to their lifestyle yet, maybe something they want to do in the future, but they just want to grow the thing. They've saved $20,000 or $30,000 or $40,000, $100,000. They've got it in the market, and now they want to grow it. They want to see that turn into 200,000 and 400,000 and 800,000, and that's great. Diversity. Some people are in the market and want from the market just one additional vehicle to help them with an overall financial plan. Maybe they've got some money in real estate. Maybe they've got some money in bonds, and they're just looking to add to that and diversify. It doesn't matter. I've taken all this time to talk about these different answers that I get when I ask this question, and the bottom line is you can accomplish all of these things simultaneously using some simple strategies that we teach. We had an ugly situation at the beginning of this year with the COVID-19 pandemic and the sell-off in the market when the economies around the world had to shut down. Restaurants and airlines and cruise lines and hotel industries and some grocery stores and a lot of mom and pop organizations, they had to close their doors, or they had to severely limit the number of customers that they could have. A handful of online companies absolutely thrived, but we took a major hit. These kind of things are going to happen from time to time, but these are the big anomalies. This is the exception, not the norm. And no matter what kind of wild, crazy, unexpected thing happens from time to time, the markets are always going to correct as long as there is still a growing economy. As long as you have good underlying fundamentals in the economy, the markets are going to correct. This is not a pleasant situation. It can be very stressful. It's not something we have to worry about a lot, but we do have to worry about it. I would caution you, be very, very careful about the people in my industry, the people trying to sell some charting software, the people trying to sell some education or teach you a trading method. Be careful of the ones that tell you they predicted this. There's a company that's a competitor of mine. that back in March and April, they were running radio and television spots, and it just sickened me to my core. It just made me absolutely, I just wanted to scream every time I would hear one of their radio ads or see one of their TV commercials. They were claiming that they predicted this drop, that a month or two before this happened, they predicted it, they knew it was going to happen, and if only you had purchased their really expensive software, if only you had bought their $15,000 complete software program and package with all these great charting tools and with all of this amazing stuff that would tell you when to buy and when to sell and all this stuff, as long as you had bought their stuff, you would have been protected from this because they predicted it. Okay, I'm not going to name the company. I don't do that. But I will tell you this. That same company that was making that claim back in March and April, they have predicted on average 3 times every year since 2008. You guys remember 2008? You remember how big a hit the markets took in 2008? If you were, I don't know if you were trading back at that time or not. The markets took a pretty ugly hit back in 2008. Phenomenal recovery in 2009. Starting in the beginning of 2009, this same company has predicted on average 3 times a year that we would have a 20 to 40% market correction and market pullback. And they were right 1 time out of nearly 12 years worth of doing that. So think about that. 3 times a year for almost 12 years. 36 times they made that prediction. They were correct 1 time. In other words, they have no idea how to predict something like this is going to happen. I will tell you this, and I can prove this and I can back this up. This is not a false claim like they were making. You can always be prepared for something like this, and that's very different from predicting it. You can always be completely prepared for something like this. And as unfortunate as this big sell-off was and as devastating as that was to some people's portfolio, you know what to me is more difficult to deal with? What is absolutely more difficult to deal with is these sharp drops that reverse themselves within a couple of trading days or a couple of trading weeks. These drops that just absolutely make you nervous. A drop like this makes you wonder, is this happening again? And then you feel okay for a week and a half, and then you get 3 days in a row and 4 days out of 5 that are another big drop, and you think, oh no, this is happening again. And then you get a little more recovery than we got during this big drop back in March. And then, oh no, you have 3 or 4 weeks in a row that are down really steep again. This is harder to deal with than this. I've said this many times. I've probably made this comment hundreds, maybe thousands of times over the years as I've done presentations like this to introduce people to our program. Anybody can make money in a bullish market. It doesn't take any kind of genius to make money in a strong bullish market. Now, some people know how to make more money than others, but anybody can make money when the markets are going up. There are a lot of people, not all of them, but a fair number of people who know how to make money when the markets are going down like this. And all of that is wonderful and all of that is great, but I will tell you this from personal experience and from working with thousands of people around this country and other parts of the world, very few people know what to do when you've got a market that is back and forth like this, because every time they reposition for a certain direction, they get a reversal and it's going the other way. And then they reposition for this direction, but by the time they do, it's only a few days later, it's going back in this direction. And by the time they get repositioned for this direction, in just a couple of days, it's going back in this direction. And I have seen that happen over and over and over again to people. And these are the toughest conditions that exist to try and consistently make money in the market. So I'm going to show you in the next maybe 20, 30 minutes, I'm going to show you exactly how to overcome that. Now, I'm going to talk about 2 slightly different types of trading that actually complement each other very, very nicely. And I want you to stay with me through this, even if you've heard some of this stuff before, even if you understand a little bit of it, I want you to stay with me and learn something from this. If you are brand new, if you have never traded your own money before, If you have never traded stocks or options, but you're thinking you want to do it, you know a little bit about how the market works, or you want to learn how it works, part of what we offer at Safe Option Strategies will teach you from the very beginning of how to open a brokerage account, how to execute your first trades, and so forth. So if you feel like what I'm presenting in the next 20 minutes or so is leaving you behind a little bit, don't worry about that. We can bring you up to speed very quickly and very easily and teach you the basics that you would need. You can still learn a lot over this next 20 or 30 minutes just conceptually on what you're doing, even if some of the details seem a little bit out of your reach. Probably, it's been my experience as I've done presentations like this, that probably the majority of you already have some experience with trading stocks and options, and so this is going to make perfect sense to you. Does anybody here that's with me live right now know what a collar trade is, or have you ever used a collar trade before? You don't have to answer, but if one or two of you want to type in to the little question pane thing, whether or not, did anybody here have any experience, or have you ever done collar trading before? Okay, a couple of you. All right. This is what a collar trade is. Very simply put, a collar trade is stock that you own, okay? A long put option that works exactly like an insurance policy. I'll show you in a minute how a long put option with stock ownership can work exactly like an insurance policy, and a covered call or a short call option that you're going to use as a way to pay for your insurance to lower your risk on a trade. That's what a collar trade is. Now, most people, not all, but most people who have been introduced to a collar trade think of a collar trade as super low risk with almost zero possibility for reward. In the traditional way people are taught to set up collar trades, that would be somewhat true. The way we teach you how to set up a collar trade and the way we teach you to execute and adjust collar trades, it's very different. It is super low risk. Sometimes for a period of time, it's zero risk. And it is potentially very high reward when you add a couple of simple concepts into the collar trade. Let me show you quickly how the collar trade works. You go out and you buy some stock. Let's say you went out and bought a $100 a share stock. And if that's all you have, if you've just got a $100 a share stock, and no matter whether you got 1 share, 10 shares, 100 shares, 200 shares, whatever you have, 100% of that investment is at risk if all you have is the stock. Those people who are buy and hold traders, they're feeling pretty good right now. The ones that just all they do is they buy stocks and they hold on to them for long periods of time, or they try to time the tops and the bottoms and just buy and sell. Those individuals are feeling pretty good right now because everything we lost back in March and April, there are some individual stocks that are exceptions to this, but the markets as a whole have recovered every single bit of that. But I'm telling you, some of those people were having panic attacks and thought they may have been having heart attacks during that drop back there. When you've got stock ownership, 100% of it technically is at risk. When you add the long put and you use it like an insurance policy, this is what happens. If I bought some stock at $100 a share and I go out and purchase a $100 strike price long put 1 or 2 or 3 months out in advance from where I'm at right now, it works like an insurance policy. If my stock price goes down, the value of my long put goes up somewhat proportionally. I say somewhat because just like with an insurance policy, you're still going to be out the premium that you paid for that insurance policy. Think about this. Let's say you went out today, maybe you've actually done this recently, and you bought a $90,000 Tesla. And that's a big investment for an automobile. That's a lot of money to put into a car. And you're not going, and even if you had the ability to go out and pay cash for that car, you're not going to own a $90,000 Tesla and not have an insurance policy on it. So you're going to go to your insurance company and you're going to say, I need a policy that will potentially replace $90,000. And hopefully I can get that policy for, I don't know, let's say, just to make easy math, $100 a month. Maybe I can get that policy for $100 a month. So for the course of the entire year, I'm going to pay $1,200 for that insurance policy. But I'm willing to give up that $1,200 because I don't want to lose $90,000 if some knucklehead comes and crashes into my car, doesn't have insurance themselves, and I find out that I've got $50,000 in repairs for this automobile. I'm going to be really glad I spent the $1,200, even if I don't get the $1,200 back. Okay, this long put option works in exactly the same way. I'm going to spend the money for this, and as my stock price moves down, my long put value goes up, and at any point in time before the expiration of my insurance policy, I can sell my stock for $100 a share. Now, I'm not going to get back the money that I paid for the insurance policy. The money that I spent on the long put option is gone at this point in time. So what we do in a collar trade is we add a covered call. Anybody here use covered calls on a regular basis? Most people who have traded options, most people that have any experience at all trading options have used a covered call. That's kind of the starting point where most people learn how options work, is a covered call. With this option, someone pays you money right now today for the ability to buy your stock from you at a certain fixed price that is determined by the strike price of this covered call. So you get some cash right now infused into your portfolio, but the trade-off is maybe you have to sell your stock later on, and it could be at a price that's lower than where the stock is currently trading. But the money you bring in on the covered call pays for the long put insurance, and that's how you set up a collar trade. Now, the reason most people think very low risk but very low reward is they've been trained to use a short call in the same month of expiration as their long put, and at a strike price very close to where they own their stock. And they are very nicely protected from the stock price going down, but there's no ability to make money if the stock price goes up. We teach it a little bit different. We go a little farther out in time with our covered call, and we take in a bigger credit at a higher strike price so that the stock has room to grow and profit before we could get called away. Now, some of that sounds very technical. We teach you how to do all of this. I want to do something right now. I'm going to give you, well, so let me kind of finish this. Stock goes down, long put value goes up, and then you can do one of two things. You can exercise your long put, which gives you the right to sell the stock up at this price. Even when that stock is trading at $50 a share, you still have the right to sell it for $100 a share. That's your right with that long put. Or, so you can do one of two things. You can exercise the long put and be out of the stock, or you can sell the long put for the increased value, and what you sell it for will make up the difference of what you've lost on the stock, but you will still own your stock. That's how you're protected with a collar trade. So very, very low risk. And I'll tell you, it's the reason you can always be prepared for something like what happened. You don't have to be able to predict a drop like we had back in March and February, but you can always be prepared for it so that it doesn't sting you and you don't lose sleep or hair or years off of your life because you're so stressed about the money you're losing in the stock market. You can always be prepared for that possibility. Now, before I get into a couple of examples, I'm going to give you a couple of examples of how you can really profit nicely with a collar trade. What I'd like to do before that is switch over to this screen. And those of you that are with me live, let me ask you this. Is there a stock that you currently own, or is there a stock that you are thinking about buying, or just a stock that you follow and keep a close eye on? And I'll show you exactly how you can set up a collar trade with little to no risk. Anybody have a favorite stock that they want me to do this with? Don't be shy. I've got enough people online with me right now that someone's got to have a stock that they like. Okay. NIO. That's the first one I got. Okay, so I'm not real familiar with this company. All right, trading at $46.11. NIO. Okay, I got the ticker symbol. What's the name of that company? Just NIO Incorporated. That's just what they are, is NIO Incorporated. Okay, all right, NIO. So let's say right now today, you went out and bought 100 shares of NIO. You're going to pay somewhere in the neighborhood. You're going to pay right around $46.03. You're going to see these prices maybe changing a little bit because the markets are open right now while we're doing this presentation. So you might see this changing a little bit. But you could buy shares of NIO. And additionally, you would want to, let's go out to, let's go out a month. Let's make sure for the next month, if we're going to spend $46 a share right now today, let's make sure for the next month, we are protected at $46 a share. Okay, you see where I'm at here? We're going to go out about a month in time, and we're going to protect our position at a 46 strike long put, and that's going to cost us $7.25. Now, what I want to do is get someone else to pay for that. I'm willing to go a little bit farther out in time, and I want to go to a higher strike price, and I want to try and find a credit. Oh, I really like this one. I like this one a lot. I want to try and find a credit that will, wow, I couldn't, okay, this is your guys' pick, not mine. And trust me, it does not always happen this way, where the most ideal short call you find is exactly to the penny what you need to pay for the long put. You notice that? We can go out and get a 55 strike short call, and almost to the penny, it will pay for this long put. So here's where we end up. And did you see the stock price jump a little bit as I'm doing this? It was 46.07. Now it's 46.27. So here's what happens. We have the price of the stock plus the price of the long put minus the credit that we're going to get for the short call, and that gives us a total of 46.24. If we did this with 100 shares, this is going to cost us $4,624 a share. Oh, it just moved to 18. It jumps around constantly. I'm going to round this to 20, okay? $4,620 to be in this trade. Now, if you just bought shares of NIO and nothing else, how much would be at risk? If you were out here paying $4,600 and some odd dollars a share, all $4,600 of that would be at risk if you bought 100 shares of that position. If you set it up the way that I've set it up right here, this is how much risk you would have for the next month, $20. Which one allows you to sleep better at night? Having $4,620 at risk or having $20 at risk? This one is not quite a zero risk scenario, but it's awfully close. And I can sleep a lot better at night knowing that that's all I have at risk versus having all four. Imagine, you know, it's one thing to do this with 100 shares. What if you did this with 1,000 shares? And you got to put another zero on that and potentially have $46,000 at risk, or only have the worst case scenario. The worst possible thing that could happen is you could lose $200 if you were doing this with 1,000 shares. Now, the reason I went out a little bit farther in time and a little bit higher strike price is because if this is my total cost to be in the trade, but the stock could theoretically, it could skyrocket to the upside and I could get called away at $55 a share. I want the ability to make some profit. If I had to sell my stock to someone at $55 a share, because that's what happens when I take their money right here, is they have the ability to buy it from me at 55. So if I subtract that 46.12, that's where it's jumping around, I could still make $8.88 per share profit, and that divided by 4612 would be almost a 20% profit. It comes out to a 19% profit. Folks, how would you still like to be able to make 20% on a position that you have, but have almost no risk on it at the same time? You can be protected and still have the ability to be quite profitable at the same time. Do you want to do one more example? Does anybody else have a ticker symbol they want to look at? And I have time. I think we can still get everything in that I need to. Anybody else want to look at it? You want to look at a really, really inexpensive stock? I'm going to do this. I'm going to do this. You might have some others that you want to look at, but I'm going to do this one. And I'll tell you the reason I'm going to do Ford Motors, because I'm going to show you how a 16-year-old kid has more than doubled his money in just barely over a year, collar trading a very inexpensive stock. Ford Motors right now is trading at $9.20. You realize you could get 100 shares of Ford right now today for less than $1,000 bucks? For less than $1,000, you could go out and pick up 100 shares of Ford. Very, very affordable stock. If we wanted to make sure we had Ford protected, let's go out a little bit farther in time. Let's protect ourselves out to a couple of weeks past there. Ford will have an earnings report at the end of January. Okay, that's almost 2 months away. Let's get protection in place beyond that earnings report. That's going to cost us a little bit. That's going to cost us 62 cents. That doesn't sound like a lot, but that's a lot relative to what the stock is trading at. So let's make sure we get someone else to pay for that, and we may have to go out a little ways in time. Let's check out that 11 strike price. We don't have a 950 strike put available to us. Okay, I'm okay with this setup. This is not quite a zero risk trade, but I'm okay with this setup. We can get Ford protected all the way past their next earnings report, and we can get about half of that protection paid for. Okay, that 34 cents a share is only going to pay for about half of that. So I've got a little bit of risk in this one. If I'm paying $9.49 per share, and I have the ability to sell my stock at $9 per share, I've got a little bit of risk in this one, right? There's 49 cents a share still at risk. But which would you rather have? Would you rather have 49 cents at risk, or would you rather have $9.21 at risk? Because if I just bought the stock, in theory, I still have $9.21 at risk if all I did was buy the stock. Folks, do you know less than a year ago, Ford was trading down around $5 a share? Could you imagine being in a $9 a share stock and see that thing go down to $5 a share inside of a couple of months, which it could easily do? I don't think it will, but it could. It could do it in a blink of an eye almost. So here we would have $9.49. We'd have only 49 cents a share at risk. If, on the other hand, Ford took off and went farther to the upside, we could make $1.51 per share profit divided by our total investment of $9.49. That's still a 16% return. And we're protected clear out past the next earnings report. So if Ford does okay between now and then, maybe we cash out with a 8, 10, 12, 15% profit. If we're still in the trade and we haven't seen enough profit to exit it, and Ford reports their earnings at the end of January and it's not a good report and they go dropping to the downside, guess what? The worst thing that could happen to us is we'd lose 49 cents a share. That's the worst thing. Okay, this is a fantastic way to be in the market and not have that crazy high risk that most people associate with being in the market and still make some decent returns. Now, let me show you how to just absolutely put those returns on an incredible flight path. And let me show you how to turn this into some fun, way more than the 16% or the 19%. Let me show you how to absolutely accelerate those returns. This is a chart going back. This goes from their IPO date back in March of, was it 2017, I believe? March of 2017 is when the company Snap had their IPO. And this chart goes to July of this year. So this chart is a few months old, but it was July of this year, 4 or 5 months ago? July of this year, one of the members of our program came to me and said, let me show you what I have done with Snap, just using the things that you guys teach here at Safe Option Strategies. He bought Snap at $24 a share. Whoops, I almost made that 25. He bought Snap at $24 a share when they IPO'd back in March of 2017. And he immediately saw that thing, little back and forth that he wasn't too worried about. And he was like, he's thinking, I'm okay in here for a couple of months. And then all of a sudden, Snap did this. And he was kind of in panic mode. And he's like, he didn't have a lot of money to trade with. This $7,200, to you, that may be a lot. It may be a little bit. To him, it was most of what he had available to trade with. He bought our program in June, end of June, I think, first part of July of 2017. And we immediately taught him how, and I got on the phone with him a couple of times and helped him get a collar trade around Snap so that he could not lose any more money. Now, it wobbled for a number of months, and he didn't make a lot of money during that time, but he didn't lose anything more. He had peace of mind. He actually told me that during this time period right here, with these swings back and forth, he said, you know what, Jeffrey, I didn't make any money during that time on Snap, but I didn't lose any money. Just the peace of mind, knowing that I couldn't lose any more money, was worth more than what I paid in the education. That's what he shared with me. Just the peace of mind that he felt during this 7 or 8 months was dramatically different than the anxiety that he felt during this 6 or 7 months. He said that alone was worth it. Now, Snap had a good earnings report at the end of January, jumped up high here, and then they wobbled a little bit again. And when they started to fall again here, he made sure he was collar traded the correct way. Just what I showed you, long puts up near the money, short calls paying for the long puts, and Snap had a pretty good sell-off here. Now, when they started to turn the corner again and move back to the upside, he sold his long put options. There was enough profit in those long put options that he was able to add 100 shares to his position for no additional investment. Folks, it was the long puts that paid for more shares of stock. Have you ever heard of dollar cost averaging? Let's say you went out and bought a share of stock for $50 and the stock dropped and went down to $30, and so you bought a second share of that stock at $30, and it fell a little bit more down to $25, and you bought a third share for $25. So now you spent $50, then you spent $30, then you spent $25. So you have spent a total of $105 now, but you've got 3 shares of stock instead of 1 share of stock. So you divide that by 3 shares of stock, and your average price per share is $35. That's dollar cost averaging. Very, very simple concept. The problem is when you start dealing with 10 shares or 100 shares at a time, and then you've got to buy another 100 shares here and another 100 shares here, instead of being $105, you're at $10,500. And maybe you don't have money to keep adding another 100 shares or another 200 shares or another 500 shares. You might be able to get your average price per share down to $35, but this can get kind of expensive when you're dealing with 100 shares or 1,000 shares or 500 shares, whatever the case might be. It can get really expensive really fast when you start doing that. Well, the difference with what he did is he added that 100 shares, but the long puts paid for it. There was no additional investment required. That's one of the main things that we teach you how to do at Safe Option Strategies. Stock went back up a little bit. He had more shares and hadn't had to increase his $7,200 yet. And he had another earnings report coming up at the end of July, so he made sure he had a collar trade in place. And Snap took a major tumble. They got down below $5 a share at one point in time. What would you do if you had a $24, if you bought shares of a stock at $24 and saw them go all the way down to $5 a share? Hopefully you wouldn't stay in that long, but there are people who do that. There are people who just suffer through watching major portions of their portfolio evaporate, and they're devastated by it. They're just absolutely devastated by it. He wasn't sweating it at all right here. In fact, the long puts he had in place right here allowed him on the technical crossovers that turned it to the upside. He was able to add 500 more shares, again, for no additional investment. That's the key to this. So think about it. He went from 300 shares to 400 shares and now to 900 shares, and he still has not increased this $7,200. And when Snap began to climb and rebound and come back up, when they got back up to $18 a share, he was up 125% profit. That's profit. That's not just a recovery from 5 to 18. That's at $18 a share, folks. He's still $6 below where he originally got in. Remember, he originally got in at $24 a share. And when he's still down $6 per share on the value of the stock, he's actually showing a profit of 125% in his portfolio. Went through a little stretch where it just wobbled a little bit, didn't make a lot of money, but didn't lose any money. Made a little bit on an uptick right here. And with an upcoming earnings at the end of January, guess how he was positioned for the sell-off that came as a result of the pandemic? He was positioned perfectly so that after that big drop by Snap, he was able to add 400 more shares with no additional investment. And when he contacted me in the early part of July, it was over the 4th of July weekend when he contacted me and said, Jeffrey, look what I've done. He said, look what I've done. I now have 1,300 shares of Snap. I have not spent one penny above that original $7,200 investment, and I'm up 376%. Now, he was in this trade for a long time. There are times when I get into a collar trade and get back out of it in 1 or 2 months. There are other times when I have collar trades that have been open for, I've got collar trades that I've been in for almost 15 years. I continue to add shares of the stock every time I have an opportunity to do it, and I continue to grow the position, and I don't need to cash it out for any reason. But there are other times when I get in and out of a collar trade inside of a couple months. Now, I have a 17-year-old son. He'll turn 18 at the end of next month. He'll turn 18 years old. My son has worked summer jobs, part-time, not a lot. He's worked summer jobs for the last several years. He has a part-time job now as a senior in high school. When he had saved a little bit of money, he came to me he came to me around July of 2019. And we waited until we felt like it was the most opportune time to take the money that he had saved. It wasn't a lot because he'd make some and he'd spend some, but what he had put in savings over a couple of summers of summer jobs, he got into 200 shares of Ford Motors for $1,700, right back around here when we got technical crossovers to the upside, suggesting that Ford was going to be in more of a bullish pattern. I basically started collar trading Ford for him. We spent a little bit of money on long puts and we didn't make much, and we had covered calls mostly paying for it. And the stock went up a little bit right here and he got a little bit profitable, and then it came down. And we made sure at the end of January, we were positioned very, very nicely for the upcoming earnings report that Ford was having. They report every year at the end of January. They report 4 times a year, end of January, end of April, End of July, end of October, Ford reports their earnings. We made sure we had a great collar trade in place for Ford's earnings. In fact, we got it in place when they started to technically cross over right here. And when Ford had this big, massive sell-off, once they finally turned bullish again, the money that he made, the profit that he made from the long puts on this drop was enough to pay for another 200 shares of stock. So he went from 200 shares to 400 shares with no additional investment. And then Ford had a nice rebound. They sold off a little bit again. We kept it protected with long puts. Didn't make a lot of money. Made a little bit of money here, but he just kind of put that on the side, because over this period of time, when it wobbled back and forth for a number of months right here, all he did was a little bit of the money he made on long puts right here that he did not put into more stock ownership. He covered himself with the cost of long puts here. And then Ford suddenly had this nice little run from down here around $6 a share back up to almost $9.50. Right now at this second, well, we showed you earlier, Ford right now today trading at $9.21. A couple of days ago when they were at $9.25, I took this screenshot. Let me get my marks out of the way here real quick. He has 400 shares of Ford right now trading just a little bit below $9.25. Folks, his position in Ford right now is worth $3,700. That's $2,000 profit, and he's barely been in this trade for over a year. Now, he wasn't making much during this stretch. It was a little frustrating during this stretch. Never lost any sleep over it, never worried about the money he had saved disappearing. Folks, this is a 17-year-old kid just following what we teach at Safe Option Strategies. He's more than doubled his money in a year. Think about this. Now, and there's no way to guarantee this will happen. There's absolutely no way possible to guarantee that this would happen, but think about this as a possibility. What if he doubled that 2,000, or excuse me, the 3,700 that he has right now? What if he doubled that again next year? And then it goes up, and then it's up at $7,400. Okay. What if he doubled that again the next year? Okay. What does that take it up to? 14,800. I'm going to have to get my calculator out here in a minute. $14,800. Okay. This would be when he's 18 years old. This would be when he's 19 years old. $14,800 times 2. It'd be $29,000 and some change when he's 20 years old. That times 2 is $59,000 when he's 21. You see where I'm going with this? That times 2 is $118,000 by the time he's 22. Folks, do you realize the path that I'm on right now? You realize before my son is 30, he could be a millionaire? Now, there's no way to guarantee that will happen. Every once in a while, doesn't happen often, but every once in a while, a collar trade doesn't give you these nice, big, deep pullbacks followed by these big recoveries. That doesn't happen every single time we collar trade. I will tell you this, it happens often enough. It happens often enough that you can make some phenomenal money doing this and never be without the peace of mind that some people struggle through and go through when they're trying to do this type of trading. Hey, that's the beauty of collar trading. Okay, now I've left myself very little time to go through this, so I'm going to go very, very fast. For those individuals that don't have an interest in owning stock and doing collar trading, we teach a lot of spread trading. And the way we teach spread trading is through the use of the high reward that comes through using options, but we eliminate the high risk We eliminate the high risk by using trade adjustments to give us a hedging effect. So we combine the high reward that is traditionally associated with option trading, and we create a much lower risk using spread trades and teaching people how to adjust a trade. Let me give you an example of what I mean by adjusting a trade. I've got to do this fast because I wanted to keep this presentation well under an hour, and we're going to cut it really close. Oftentimes when you put on an option only trade, you're looking at technical indicators, you're looking at what you think the market is going to do, and then all of a sudden, without warning or explanation, it's going a different direction for you. The market is suddenly moving against the trade you put on. This trade right here, a long call at this strike price and a short call at this strike price higher, is a bull call spread. Okay, we teach you how to do bull call spreads. But what we also teach you is how to have an adjustment plan set up in advance in case suddenly it's going the opposite direction of what you want. And we teach you how to roll the options and literally change the trade to match the new direction the stock is going so that you can still get out of the trade profitably. And we send trades out to our students. I'm going to come back to this chart in a minute. I've got this in. I'm going to come back to this. We send these trades out to the members of our program 1, 2, 3, as many as 4 or 5 times a week, and we show you exactly what trade to get into, exactly what adjustment we're going to make if we're wrong, and we stay up to date with you on this trade. And folks, at the time of this live presentation, some people will be watching this as a recording later on, but at the time of this live presentation, collectively, the trades that we've sent out to our students this year are up over 150%. Okay? Yeah, I'm going to come back to that. This is how I want to end the presentation. I am a big, huge believer in this saying, feed a man to fish and you feed him for a day, teach a man to fish and you feed him for life. I love that saying. You need to learn how to do this. At one time, I tried an advisory service with Safe Option Strategies. I tried doing an advisory service at one time, and what I found was that people just wanted to be fed over and over again, and they never wanted to learn what was going on. And then they would get a little overconfident and they would put more money in a trade or more contracts into a trade than what I would recommend or suggest. And it would end up costing them a lot of money and they would get frustrated, but they were never learning how to do it. You've got to learn how to do this. But I always thought there was one thing missing from this very famous oft-quoted phrase, feed a man to fish and you feed him for a day, teach a man to fish and you feed him for life. What happens if the man starves while he's trying to learn how to fish? Okay, I've got a brother-in-law who is arguably one of the greatest fishermen that you could possibly know. He owns a construction company, so you're not going to see him on these TV shows with these fishing tournaments and stuff. He just doesn't have the time to do that. But I'm telling you, anytime we go with him somewhere and he throws a fishing line in the water, he's pulling out fish. It doesn't matter if we're in a river, if we're in a lake, if we're at the ocean. He knows how to fish. He has tried to teach me how to fish, and I've gotten better over the years. But I'm telling you right now, if the two of us went out into the wilderness and we were required to survive off of our ability to fish, he would be fine. I would starve to death. If he were not willing to feed me as I'm learning, I would starve to death. I'm telling you right now, there's no question in my mind. The way we've set up our education at Safe Option Strategies is that we teach you everything you need to know to learn these strategies. If you just want to learn how to do the spread trading, you have no interest in owning stock, there's nothing about that collar trade that appeals to you, we'll teach you how to do that through our spread trade course. If you want to learn just the collar trading and you're not interested in the spread trading and doing the option only stuff, we'll teach you how to do that in our spread trade course. And it's thorough education. It covers everything. Everything from how to set up a brokerage account and trade your first stock or your first option to the different strategies that you can put on and the timing of those strategies and how to read technical charts and how to understand fundamental analysis, how and when to adjust the trades. We teach all of that. But we're not going to let you starve while you're learning to fish on your own. Every week we send out trades that you can follow and do with us. And you can not only be fed and profit from these trades, but you'll learn from these trades. And we're with you every step of the way. We have daily live classes to talk about what's going on in the market and how to apply it directly to what you're doing with these trades. And so you learn and you profit at the same time. We have a daily open chat room that members of our program talk to each other and talk to me through this chat throughout the day. And we give you real help with these trades. So while you're learning how to do this, we're keeping you really well fed. There's not a member of our program anywhere in the world that cannot pick up the phone and get a hold of us, or send an email and get a hold of us, or send a text message and get a hold of us and get help with their trades or with understanding a concept, whatever the case may be. I showed you this earlier. Let me show you a close-up of this right here. This is where we're at for 2020 so far. We're up 158% on the trade. These are the trades that we send out to our members. And if you don't believe me, one of our members of our program was kind enough to, and here's the reason why I want to show you. This is a screenshot from his account. And I want you to know that at the beginning of the year, this particular member that sent me this screenshot started with a $6,000 portfolio. He only had $6,000 to trade with. That was the total size of his portfolio. And he took a screenshot for me just the other day to show me that he was up 163. And you know why his is a little bit higher than ours? Because he did a few more trades on his own as he was learning things and getting good at it. So he was copying the trades that we were doing, and he did a few additional trades on his own. Or he stayed in for a little more profit than when we got out. I'm showing you this because this really works. We're not making this up. This is what we're really doing and really accomplishing. Folks, this has been a tough, crazy year. This was difficult for a lot of people to deal with. In some ways, this was even more difficult to deal with because these happen so quickly, blink of an eye type stuff. Just today, just in the hour that we've been doing this presentation with you live, the Dow Jones has gone from being 60 points to the downside to being 20 points up. Now it's back down. It's all over the place. That's just today. Don't let any of this keep you from making big money in the markets. Now, our education, don't log off because I'm going to make an offer to the people that are on with me live that is pretty incredible. Our education is not cheap, but it's incredibly effective. And for those individuals that took time to be on this presentation, we're going to take any of these. You can do, let me just simplify this for you. You can do the collar trade course as a standalone course, and you have an annual or a lifetime membership. You can do the spread trade as a standalone course, annual or lifetime membership, and we discount them a little bit when you combine them. For anyone who will, now there's one catch to what I'm about to tell you. What I'm going to do as far as an offer right now, and the reason I'm making this offer is I do not employ salespeople. There are no salespeople at Safe Option Strategies. Anyone who will email or call, and I'll give you that information in just a minute, we're going to take 50% off any of these prices. And that's the offer that we're making through the month of December. That will end at the end of December. But for the month of December, we're going to give you 50% off any of these prices. For 24 hours from the time you're viewing this presentation, I'm going to make you an additional offer that's going to be an even deeper discount, but it's going to be reserved for those individuals who will call or email. It's not a gimmick. It is a way for me to not have to employ salespeople. It is a way for me to not have to chase after people or pay someone a commission for getting a sale. I want to work with people that are serious. I want to work with people who are proactive, and sending me an email or making a phone call does not obligate you in any way, shape, or form to purchase our education. But if you will email or if you will call, please leave a message if no one answers right away. If you will email or call and just simply say, what's the additional discount? Or if you have some questions or want to have a conversation about your situation, I will take as much time as you want, answering your questions. I don't want anyone purchasing this education program unless I really, truly believe it's the right fit and that I can help you make a lot of money. And if you're proactive enough to send me an email or make a phone call and just say, Jeffrey, what's the additional discount? I will make you another very deep discount on top of that 50% off and make this an incredibly affordable way for you to make profit and have peace of mind and calm. How would you like to set up your portfolio so that you can just relax for the rest of this month, enjoy the holidays, knowing you can't lose a penny, and know that you can still make some nice profit? I spent an hour on the phone yesterday with a brand new member of our program. He had about around $100,000 that he was trading with, and he already owned 5 or 6 or 7 different stocks. I spent an hour on the phone with him. His entire portfolio is now set up to where he could make as much as 15% in the month of December and not lose a single penny. No matter what happened for the rest of this month, he cannot lose a penny in his portfolio. He said from his vantage point, that was worth probably 10 times what he paid for our education. Just to have that peace of mind where he won't stress for 1 second through the month of December. And he can still be nicely profitable if certain things go the right way. And if they don't, he's just golden. Not a worry in the world. Folks, send us an email, make a phone call. I'm sorry I took a little bit longer in the presentation than I planned. We went like just barely over an hour. I'll be around today to answer emails and answer phone calls. There's other people here that can answer. But listen, I hope to hear from you. If not, I wish you nothing but the best of luck. I hope you saw some things here that are beneficial and helpful, even if you end up not having an interest in our education program. But if you have questions about it, if you have information you want or want to see if it's a good fit for you, give us a call or email us. Otherwise, happy holidays. Have a great day. Thanks, everyone. Bye-bye.